when should we register for the payrolling of the P11D bends? Should we do this by the end of the year or next year for April 26?
If you wanted to go payrolling for the 25-26 tax year, you're too late. If you want to start payrolling for the 26-27 tax year, you have to register before midnight of the 5th of April 2026. So you can register now, but if you register now, that's for 26-27. But for when mandation comes in, there is no registration.
Keeping businesses thriving, compliance and safe, forecasting strategy, it's all on our mind. It's time payroll took its place in the boardroom to shine.
We're already in October, 1 month away from the budget. I'm going to let everybody know now, just so you don't forget to sign up for the next episode of PQT. We'll be running the next payroll question time 1 day after the budget. So if you have a quick moment while I do this introduction, or if you heard this before, now's the time to put it in your calendar. Of course, for those that are new to the show, welcome. It's really good to have you here. We have an expert panel here to answer all of your payroll questions, whatever they may be. They don't have to be related to today's topic. Please do put them in my questions box and we'll ask our expert panel in real time. Now, of course, we have got a few selected questions today we'll be asking during the course of the show as well. We're also going to be running a poll, so that's your opportunity to get involved in today's episode. So please do give us your feedback and we'll try and answer those results and comment on those results as they come through. Of course, we are also recording today's session, so you don't need to be busy scribbling notes. We'll send you a copy of the slides at the end of the show, so please don't worry about that. And we are also going to be sending you a survey. Now, these surveys are super important. That's a chance for you, our wonderful audience, to tell us what you want us to talk about in a future episode of the show. So any of those topics, those things you think, you know what, would be really good if we chatted about this particular thing in payroll, let us know. We'll try and include it in a future episode. I'm going to read out a quick disclaimer, just to remind everybody that this presentation does not provide definitive answers to individual queries, and in some places it does take views on matters which are indeed uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, I'm going to introduce our panel in just a moment. For those that don't know me, I'm the host of today's show. I'm going to be facilitating the conversation. My name is Nick Day. I'm the host of the Payroll Podcast. I'm also the founder of JGA Recruitment. I'm an Award 300 member, and I was 2024's Global Vision Award winner. I love speaking about payroll. I'm passionate about payroll. I love placing people in payroll. And this is a great show that I'm very excited to be part of as well at Payroll Question Time. Without further ado, let's introduce our wonderful panel. I'm going to start with you today, Andy Nichols, going from my left to right. Can you introduce yourself, please?
Hi everyone. Yeah, Andy Nichols. I think pensions in payroll. That's what I like all about, and I'm sort of a consultant in that, help with CRPP and so on. Yeah, so any pension questions, ask away. Otherwise, great to see, well, not see you, but listen to you and answer your questions, etc. today.
Fantastic. I'm moving across our encyclopedia of payroll, Mr. Simon Parsons.
Yeah, good afternoon, everyone. It's good to be with you again. Simon Parsons, Director of Compliance Strategies here at SD Worx. I also chair the BCS Payroll Group and Irene, and involved in a number of government committees, as are some of the other panel members. I'm on part of the Employment Payroll Group and the Rep Body Group at HMRC, along with others. I'm part of the I think they call it Partner 50 for rewards. So I'm part of Partner 50, and was fortunate to be one of the judges this year, as you were, Nick, I think, on the reward strategy. So looking forward to that event in next month. Good to be with you.
Yeah, I found the judging process really quite exciting. Oh, we're in the same room, weren't we? In the same categories. It was a lot of fun, a lot of debate going on. With Richard George.
Afternoon, Richard George. Just starting my 40th year in payroll. Obviously, as I always say, I started when I was 4, because I can't be any older than that. Multiple roles in the industry at director level, and as Simon mentioned, Award 300, committees within government, and have spent 10 years supporting the industry.
Fantastic. And of course, last but not least, you may have some news for us. I don't know if Matthew's going to be staying with the show for every episode, but I don't want to give anything away. But Matthew O'Quigg.
Yeah, thank you very much. So I'm Policy and Research Officer at the CIPP. obviously CIPP is here to represent and support the profession. So whether you need education, qualifications, or just the government advocacy stuff that we do in the policy team, we're sort of one place for everywhere. But yes, as you're saying, I think this will be my last payroll question time for at least a little bit. Sam is going to be coming back, the policy lead. She's going to take over from me. But I will be doing a secondment at HMRC to help out with the payrolling benefits project that's currently going on and will be going on until April 27. So I will take all of the credit for the things that go well and none of the criticism for anything that goes wrong. Just staking my claim there. That's how it's going to be. But yeah, hopefully we'll get some positive things come out of that, and I'm really looking forward to that. But unfortunately, that means that I won't be around to do these lovely panels.
Exciting.
Fantastic. Well, I think it goes without saying from all of us panel members and everyone I'm sure is watching, huge congratulations on that secondment. And, you know, I'm sure Sam will do a fantastic job in your absence. And I want to just say as well, unfortunately, Karen can't be with us today. She's picked up the lurgy that's been going around. I think it's called all of us at one time or another. So it was a little bit too unwell to join us for today's episode. But of course, we have 4 wonderful panel members, and we've already got a first question that's come into my questions box, which I'll get to in just one moment. Before I do, let's talk about today's discussion topics. We've got a few things to get through today. We have the Employment Rights Bill we're going to be discussing, the tax advisory market, national minimum wage, always a hot topic, my time, any other questions, and we'll also talk about some recent research. And I have to say, this is really fantastic, undertaken by SD Worx, called the Payroll Pulse Research, and there'll be a free download where you can access that research as well. So we'll talk about that when we get to it. Right. Before we jump into our first topic today, Employment Rights Bill, let me just ask the first question that comes in already from Gabriella. It says, what does the law say in terms of calculating average holiday pay? Can AHP be calculated on overtime only and not on commissions, for example, even if commissions might be a recurring pay element rather than a one-off? Thank you. Who would like to tackle our first question? Simon, I'll come to you for the first one.
Sure. So average holiday pay. Well, I think we've got to look at the terminology that's being used and also some of the rulings that have occurred. So commission, in the sense of what we traditionally label commission, is part of average holiday pay under Regulation 13. So you can't say overtime is, but commission isn't, because it is, unless, of course, that commission is not really commission at all, but is something else. That's not considered part of the normal earnings of an individual. But as the term commission use, I'd say it is included in average holiday purposes as normal earnings for Regulation 13 at least. And the definition for 13A isn't actually much different. It just doesn't fall under the European Court rulings that apply to Regulation 13. And under the new methods that came into play from 1st of April 2024 for irregular hours workers and part-year workers, commission is definitely included no matter what. It's part of the average hours accrual and average earnings to find out what the pay rate is, and the rolled up holiday alternate for those who are wholly or mainly irregular hours workers. So can you have it that commission isn't included? Suggest no, you can't.
Question for you, Simon. I know this can be the case on the maternity side, but commissions, if they're completely variable, they change every month. Some month there's no commission, some month there might be £100, some months there might be significant amounts. Is it, you know, how far back do you go back for the averaging? Is that how it works? You know, can you time your holiday straight after a significant bonus, for example, in order to accrue a slightly higher amount?
Well, bonuses wouldn't necessarily be included. It depends on what the status of it is. But a commission, yeah, it's in strictness of the regulations, it's anything that was earned or due, not necessarily paid, up to the Saturday prior to the leave. And under Great British law, or Great Britain, it's 52 weeks averaging. So you go back 52 worked weeks, excluding 0 pay weeks. So if you exclude a week, you have to go back a further week, and the maximum you go back is 104 weeks, and that's part of the averaging. That has been the requirement since April 2020. before April 2020, it was a 12-week earnings average, 12 weeks prior to the prior Saturday. That is still the case, I think, from memory, for Northern Ireland. Northern Ireland hasn't yet adopted the 52-week averaging requirement. So people who are under a Northern Ireland contract still on 12 weeks, but Great Britain, contract, it's 52 weeks earnings average since April 2020.
That 52
And
weeks is
Richard, I know you're
essentially
going
to try and stop
52.
that situation that you're on about where you're timing your holidays, because you're looking back over a full year,
Flat.
and any sort of seasonal fluctuations would be averaged out.
Okay.
I think
Great.
Richard
Richard, it sounded like you were going to make a comment. What,
Go on.
Mr.
Yeah, I was going to add to
Point that
Simon.
way.
So we've got some very bad delays. Apologies. Yeah, following on Simon, it's the statement really for the Commission is if it's intrinsically linked to the individual's personal performance. So Simon obviously mentioned that not every bonus will be in, because a lot of bonuses are based on business profit or business modelling, while commission or merit will often be linked to that individual's performance. So if it's a team bonus, no, but if it is a true commission, yes. And if you can't sleep and are very boring, then it's the Gary Locke case against British Gas, if you want to do some reading up.
Very good. Okay. One other question that's come in, and we'll jump into our first topic. Second question is, can the service charge Tronc payments be included in the national minimum wage calculation? I should have saved this for the national minimum wage section, but I've asked it now, so I'll stick with where we are. Matthew, I'll come to you on this one.
So with Tronc payments and with payments of tips, you are not allowed to make any deductions from those amounts. The entire amount now has to go to the employee. We have, however, asked for clarification on where a third party operates the Tronc, and we haven't had a fully rounded response on that, if you will. So currently our understanding is that even if operating as a third party Tronc, that should be paid for by the employer, not from the tips, because the tips, as per the law, should go 100% to the employees. So you can't make any deductions from it, so it shouldn't have any sort of impact on national minimum wage there, because it's kind of separate from your earnings as such.
The key as well, Nick, is obviously it can't be accumulated into the earnings to make up the national minimum wage rate.
Yeah, I understand. I mean, it'd be strange if it's something you can't guarantee. I mean, you should already be paying national minimum wage, right? So if you're including
right,
it, I think you're already on slightly dodgy ground.
Yes, you can't. You used to be able to, but that stopped on the 1st of October 2009. So since October 2009, you can't include tips or Tronc payments as part of pay towards national minimum wage.
Super. Well, hopefully that answers
what I
the
sort of
question. Thank
still
you for putting
sometimes
it in
refer
our...
to as like the American system, is that they still do that in America.
Sure. Sure. Right, let's jump into Employment Rights Bill, our first topic for today. We're going to be covering a few things here. Matthew Taylor, of course, appointed to lead the Fair Work Agency. Maybe we'll start there. Lots to talk about, but we're going to go through the roadmap position, 0-hour contract status, and status of the bill. I'll seen something in brackets there, but Simon, you're laughing, so let us kick us off if you can.
Okay, yeah, well, the first line there is mentioned, this is just a recent announcement, is that Matthew Taylor has been appointed as the chair of the new Fair Work Agency. This is being established from April next year, 2026, to replace the enforcement duties on certain employment rights. The three rights it's coming into initially are national minimum wage, then it's going to be looking at holiday pay. We've just had that question, Nick, so it's quite timely. And holiday pay at the moment is not dealt with by a group or an enforcement. It's done on an individual basis, although there is case law which might give out a general practice, as you know, that law doesn't enforce an employer to do anything unless you sue them, in effect, or take them to an employment tribunal. That will change potentially under the Fair Work Agency when powers may become similar to national minimum wage, whereas if you make a complaint, the enforcer will enforce it and give a notice to pay. And the third area that they're of course looking at is sick leave. So there is concern in government that still around 2 million employees are being denied holiday pay rights that are entitled to it. And equally, we see cases, we see it in social media, etc., in questions of where people seem to be being denied their right to sick pay, even if they qualify for statutory sick pay. And at the moment, there's an element of, you do have a means to complain about lack of sick pay, you can go to statutory payments, people at HMRC, and they will potentially enforce it after a period of time. So that's in relation to Matthew Taylor. The other aspect on the roadmap position is there's a whole raft of employment rights bill matters here, sick pay being one, maternity rights being extended, even for those pregnancy related prior to or miscarriage, etc., bereavement that are being expanded, union rights, etc. I'm sure some of the other panel will mention some of the other elements. So there's a lot going on. So they've outlined a roadmap of when some of these will actually come into force. And initially, the first one we see happening in April 26 is the introduction of new statutory sick pay rights. So statutory sick pay will be due to everyone that's a worker or an employee. The requirement is that they're sick for one full day where they would work. If they are, they're entitled to statutory sick pay. And the statutory sick pay will be a new 80% subject to an upper flat rate, so 8% of average earnings. So there's an element of seeing how that goes down, but be prepared that actually every day, 3 waiting days is gone, 4-day PIW is gone, so 1 full day sickness, doesn't matter what their earnings are, they will be entitled to statutory sick pay from April the 6th. There are some transition arrangements that are kind of being managed through and thought about, but that's the main one that I think of for April. Then there are others for April 2027. There are some items coming in October 2026, but you've got extension of union rights, 0 hours contract changes are likely to be April 27 from memory. And yeah, that's I'll allow some of the others to say a word or two.
Richard, let me come to you then. I know it's, you've probably all got some commentary here. What are your thoughts?
Yeah, as Simon quite said, we've got 3 tranches. The other one for next year is the collective redundancy protection, which is doubling. But obviously for payroll, the big focus for April is going to be the sickness. We know a lot. Obviously, we know how the calculations are being done. We know the ruling on single day sicknesses, and we know that linking will remain based on that single day PIW. But the big stuff at the moment is what we call the in-flights. So there is a group of what we're calling now in-flight sicknesses, and really you're looking at 3 scenarios. You're looking at somebody who is sick prior to the 6th of April, who is continually sick through and after it. Obviously the rules could change for them from that date. You then have those who are sick before it, come back to work, and after the 6th of April go sick again within the link. And obviously at the moment you would apply the rules from the first sickness. So in principle we see that second scenario, and then the third scenario is somebody who isn't eligible prior to the 6th of April, who is off sick, who continues to be sick after the 6th of April, and obviously with the new ruling would become eligible for a payment. And then we have the complexity of, does the SSP start from the 6th of April? Do they get another full 28? So there are, I guess, three key areas that we are very keen to know about in relation to that. Other than that, it's probably fairly sealed in relation to what the expectation is.
And Matthew, so you're nodding along with Richard's response. Anything you'd like to add? Have we covered it?
Yeah, covered that. We sort of just waiting for those last bits. I know that those conversations are currently happening within the DWP at the moment. I don't know what the outcome of those conversations is, so I'm still sort of waiting with the same bated breath. I suppose we've got here that we're in the ping pong stage, and I suppose just to sort of clarify that we're in the consideration of amendment stage, which kind of means that the House of Lords and the House of Commons are just arguing at the moment as to what the final outcome of that bill is to look like. So it will go backwards and forwards. I would expect, if I was a betting man, that they would have it done and dusted before the budget, because they would probably quite like to have some nice sound bites for the budget of what they're doing for working people, etc. But just as something that's happened in the last couple of days, we've actually got 4 new consultations that have come out for making work pay. So we've got the trade union right of access, duty to inform workers of a right to join a union, enhanced dismissal protections for pregnant women and new mothers, and leave for bereavement, including pregnancy loss. So we've got 4 new consultations in that make work pay banner, which will all feed into some of the different measures from the Employment Rights Bill and feed into the Fair Work Agency.
And I guess they're fairly set up with the later options, because obviously the fire and rehire and the major union changes are obviously sitting outside of the majority of payrollers' remit. I guess what's also quite interesting is obviously it went to the House of Lords, who made 5 amendments, and from my understanding, it then went back to the House of Commons, who completely rejected them. So I think the other key factor at the moment, and it sort of follows on from Matthew, is, you know, if there is a concern, it's going to be the timeline and whether it changes and whether it extends. Probably good or bad news for payrollers, SSP is not in it. So SSP is the one that's absolutely happening in April, but we could see in the budget or around the budget time, as Matthew quite rightly said, once that royal assent appears, that they may change the timescales on some of the other ones, which is quite interesting.
Yeah.
We've had a couple of questions come in. Before I jump into them, Andy, any other additional commentary, or shall I jump into the questions?
Jump into the questions. Not a lot of pension related stuff in that, really.
No, I wasn't
Yeah.
there would be, but always worth asking a question.
The only other parallel comment, Nick, is there's Northern Ireland stuff going along it as well. So not strictly Employment Rights Bill, but April, for those who employ people in Northern Ireland, there is a new statutory parental bereavement pay. Northern Ireland, different to the Great Britain statutory parental bereavement pay because it includes miscarriage. But these kind of all seem aligned to the subject under discussion. Nothing to do with the Employment Rights Bill. It's Northern Ireland only, but does affect us in payroll.
And
Sure.
sort of
Well,
following on from that, sorry, Mike, just following on very quickly, because the question gets asked a lot, will the SSP changes be in Northern Ireland? And the answer is yes.
Yes.
Good, you heard it here first. Simon, so question, when should we register for the payrolling of the P11D bends? Should we do this by the end of the year or next year for April 26?
Okay, so on payrolling benefits in kind, when mandation comes into play, it's likely that you won't have to register because it'll be required that you are doing it. Registration will be required for going a year early, and as people will know, for even years earlier. So if you wanted to go payrolling for the 25-26 tax year, you're too late. If you want to start payrolling for the 26-27 tax year, you have to register before midnight of the 5th of April 2026. So you can register now, but if you register now, that's for 26-27. But for when mandation comes in, there is no registration because everyone's registered.
Okay, very good. Can and or should we deal with taxable mileage expenses through the payroll?
Yes, you don't have to. Oh, taxable mileage expenses, sorry. You're saying taxable mileage, not non-taxable.
Yes.
Yes, potentially yes, because it'd be income is the thought, so it'd be subject to class 1 national insurance. The excess is the position, so it should go through. Non-taxable mileage reimbursement doesn't have to go through the payroll. Sometimes there are advantages to putting it through the payroll if you're offsetting some elements against that, against things like car allowance, etc., which we had the ruling of in recent years and some claims that employers did. But taxable fuel payments are income.
Okay, I'm going to come to you with this one, Richard. Last question before we change to the next part of our conversation today. Regarding SSP from day one of absence, have HMRC notified the technical requirements to UK payroll software providers? Our provider is not aware of the changes yet.
Sorry.
Simon, do you want to do
Well, your software supplier is probably correct. They haven't been notified for the technical changes for April 26. I'm part of, as chair of the BCS, which in the old days used to stand for British Computer Society. They call themselves now the BCS, the Chartered Institute of IT Payroll Group. We are lobbying hard to get these specifications out. Matthew will know, along with the CIPP, can't really say too much, but that CIPP and BCS are in heavy consultation stage with members of the DWP on activity around it, because some of it still requires ministerial sign-off. And so there's not a lot we can really say until that is signed off. It's very close to the wire. So if your software supplier is saying they don't know anything about the technical changes, they are absolutely right, because they haven't been issued. However, they should be aware that they're potentially on their way, because meetings have been held with software developers along the lines of the principles. And so most of the outlying, the things that Richard, I've got to point the right way, that way, pointed out of the 3 areas under what is the answer, remain the areas that is what is the answer. And software needs to know, otherwise it can do with the ordinary, but it can't do with the transition. So the transition is a big area. There is another consultation taking place, I think it's Monday, but I can't really talk about the content of what that is until it's actually announced, but only to assure you that the software industry and CIPP are working very heavily with DWP to, say it politely, get on with it, because we're running out of time. You're more likely to see probably finalised announcements around the time of the budget, I suspect.
Sam was there.
Okay.
Was it week before the last, Matt?
Yes,
Yes.
Sam's there.
What happens at BCS stays at BCS. No, I'm only kidding. That's fine. Okay, good.
Well,
So
what happens
let's
in
move on
those
to the-
meetings is absolutely secret, to be honest, Nick.
Yeah,
because
that's what I
the
mean.
level of engagement.
I was making a bad joke on the idea of Fight Club, but I get it.
Sure.
So
Okay.
let's move on then to the tax advisory market. The net effect on the payroll industry, considerations of its application, money laundering, etc., and senior manager checks and AML. Now, this has caused quite a conversation behind the scenes, and with Karen, obviously can't be here as well. So I'm going to come to you again, Simon, on this one, because I know you're in conversation with Karen about this pre-show. So I wonder if you can kick us off. There's a couple of things I'm going to bring up on this as well, following a really interesting conversation I had around how payroll may circumnavigate some of this. And I'll be interested to get your views on it as well later on. But let's kick off with you, Simon, and we'll get the conversation going.
Yeah, sure. And again, this is one of those cases where we're running out of time. We really need to be getting on with this from a government angle, and it is a bit of a concern. However, the implication from the HMRC policy people, as far as I understand it, is it's a soft touch initially, but does need to come into play. So what we're talking about here is anybody that's offering payroll services, well, not necessarily, It's anyone interacting on behalf of a client with HMRC is considered a tax advisor under a new definition which is in draft legislation currently. All right, so it's not the current definition of tax advice market, but it's a new definition of tax advice market that if you interact on behalf of someone else, you are a tax advisor. And if you're providing tax advice, and that can be contacting HMRC to ask a question on behalf of someone else, potentially, or submitting a form or some other communication, or dealing with certain matters, that you're now fall under tax advice. Previously, payroll was not necessarily directly within the tax advice market unless it was actually giving tax advice. So interactions with HMRC were not considered tax advice, but under the new definition of the proposed legislation, it is. So it makes a change. The other aspect, and I think from memory, forgive me, I think it's Reg 5 of that draft, there is a requirement that all tax advisors must be regulated for anti-money laundering. So that then captures payroll service into anti-money laundering regulatory requirements. Now, many already will do that, and I say personally myself, I am regulated for anti-money laundering as an individual. Simon Parsons is, and his in his own name, as it were. So I meet that requirement, but my regulator at the moment is His Majesty's Revenue and Customs. So there are potentials that that may change as well. So, so what's the effect? If you're an in-house payroll team working for your own employer, there probably is absolutely no impact. However, if you're doing payroll for a bunch of franchisees of your brand as a bureau to those people, that might change the position, or you're a shared service or something else. So there is an element of thinking, what is it? So there is an element of, will this affect me? If it does, how do we react? What timescales do we have to do this for? Because in effect, this could come into play in April 26. That's the proposal. I know there's certain lobbying of saying that's far too short to delay it. We'll have to wait for those announcements. But at the moment, it could be that we as payroll professionals all fall under anti-money laundering regulatory requirements from April 26. If it does, we have to make sure that we have performed due diligence on our entire client base, prove who the owners are, get their identification, driving license, passports even maybe, undertake checks, and equally within our own business, have our senior managers of our business as a payroll supplier, or you as a payroll supplier, checked and regulated under anti-money laundering. What does anti-money laundering require? It requires that due diligence, but then requires an element of risk assessment. So you have to risk assess the client, and then you have to risk assess the work. So risk assess the client, that could be, are they related to a Russian oligarch? In which case you're probably not allowed to trade with them at all, and so you need to cease trading with them. Or is it on the board of directors, you've got an MP or a member of the House of Lords, in which case they would be considered high risk. You can service high risk clients, you just got to be wary and identified that they are, or have criminal intent, etc. So there's an element of making that assessment, and then there's assessment of the work. And generally speaking, I tend to say if you're performing payroll for their staff, the risk is probably low. But if they're asking you to do some very strange things, the risks may be more medium to high. So there is a consideration of what it is. Now, lots of people get confused thinking that anti-money laundering means something to do with handling money. In this context, it absolutely has nothing to do with handling money at all. It's not a requirement. The fact is you're dealing with the tax authority. That's sufficient to require anti-money laundering obligations to come into play, not the fact that you touch any money or not, or it's handled by the employer alone. It's got nothing to do with it, because under anti-money laundering, they have a category called accountancy service providers. So you're not money fund transfer companies, their obligations are different. There was a paper out yesterday, I think it was, from memory, which is a response to the regulatory vehicle for anti-money laundering. Now, there are lots of anti-money laundering regulators at the moment, HMRC being one of them, but Karen would probably say that she's related to the Institute of Chartered Accountants of England and Wales, that they act as her firm's anti-money laundering regulator, and other organisation, the Institute of Bookkeepers, you know, loads of them. There are 26, I believe, just in the accountancy industry alone that are regulators. The government's proposal is that they are all disbanded, that's my words, not theirs, and that everything will have to be regulated by the Financial Conduct Authority.
I think Karen said there was split across 23 different supervisors
23.
at the moment.
26 in total, 23 of them are for accountancy.
Accountancy.
Interesting. And she said
Yes.
she wonders whether or not she'll need to pay the FCA in addition to the ICA EW, and it's an interesting go back and forth between you two. So I thought it was worth mentioning.
Yeah. Well, that's an interesting thought, because they'll be members of ICOR because they're accountancy firm, but who act as their regulator as well. But if they now have to be regulated by the FCA, that's probably an additional fee, because ICOR will still want, you know, you can't be an accountant by registering with the FCA. You've got to be, you know, if you're a chartered accountant, you've got to be part of a member professional institute. But it sounds like now got to regulate for AML with this other body as well. So it's an interesting comment from Karen.
One question I had, unless there's any more further commentary here, I think you've given us a pretty good overview. Andy?
Nick, the same really applies to the pensions industry. I don't know, it's the unintended consequences type thing, isn't it? I guess, but also what exemptions will HMRC give with payroll, for instance? Should that, like, you know, paying your normal staff, can that be exempt? But the pension industry, obviously, they're providing payroll services to lots of pension clients, and so it's quite wide, isn't it, what they've done? Anyway, that was just my thought.
It's a good observation. Obviously, payroll people will hopefully know that you know, we can't give tax advice unless we're regulated. Same on the pension side. So the question I had that I wanted to raise is, I spoke to a product developer for one of the major software firms, vendors, who said there might be a workaround, which is if we develop AI agents or you know, your own agents you can work with that can provide all this advice, providing you opt in. It's not a human giving the advice. We have all the different solutions, and as an individual, you are looking for, you know, tax advice on what you do with your money, pensions advice. If you opt into the agent that has all the answers, where does the legislation, or where would the legislation sit there? You're not giving individual advice as a human to human, but you are agent to human. Of course, the agent can be preloaded with all the different scenarios, and effectively could be working from an algorithm to create what would be tax advice or pensions advice. Maybe it's too soon, but these agents are being developed very quickly. And if vendors can start offering these kind of solutions to their employees, then employees are going to be more in tune with how they save either a pension or where they move their money around. Is this an effective potential workaround the tax, you know, the advisory market, by offering agents that can do the same thing, but you have to opt in order to receive it? Simon, I don't know if you thought about this.
I don't think so, and I think they may have misunderstood. That might have worked for the former regime, because tax advice is not signposting or guiding. Let's be clear, under the current AML regulations, if you only signpost and guide, you're not giving tax advice. But the tax advice here isn't tax advice. The tax advice they're talking about here is interacting with HMRC. You can give no advice and interact with HMRC, you are a tax advisor.
I think the thing that I would point out with that proposal is that a tax advisor does not necessarily need to be an individual. So in the example there, it is still a business to business transaction of providing that agent, and that agent, AI or otherwise, is acting on behalf of the company providing it. Therefore, that company, in my opinion, could still be seen as a tax advisor in that situation, despite the fact that they don't have a human sitting there saying, here's the tax advice I want to give you. I think the sort of AI is almost a bit of a red herring and kind of immaterial in the sort of assessment there.
Yeah.
Interesting.
Well, the other interesting angle with AML, of course, is they have what they call a responsible person. So it's an element of what is a person, maybe.
Maybe, but yeah, because you can see the workarounds that are obvious there if that was challenged. Good. Listen, let's get our listeners and our audience involved. We've got our first poll of the day. Obviously, it links to what we've just been discussing. What is the net effect of tax advisory market for your firm? High impact, medium impact, or no impact? Of course, for some of you, it will be no impact depending on the type of payroll that you run. But it'd be interesting to see the results here. We'll ask our panel to comment on those. If you are, while you filling those that poll in, if you have any questions up for the next topic, now's the time to start putting them in the questions box. The next topic we're going to go to is, of course, national minimum wage. We're going to be talking about the position of the LPC, various options and plans around the equalising age, and the current bracketed position on rates. So if you have any questions on national minimum wage, please start putting them in the questions box. We can get those out and ready for you so you can manage your payrolls with confidence with the advice and support of our expert panel. Right, let's have a look at these results, and I'm going to come to you, Richard, for your thoughts on these. How are we looking? So let me just read these out for some of you that may be in audio only. High impact 19%, some impact 25%, and no impact 56%. The question, of course, is what is the net effects of tax advisory market for your firm? Richard, what are your thoughts?
Yeah, I think it's quite about right. If you think about the, I guess, industry of payroll as a whole, the percentage of in-house payrolls is obviously going to be high. The level of businesses that are running through an already regulated business, such as an accounting firm, is going to be probably next. And then obviously you're going to see the remainder where we, as Simon said quite near the start, possibly the ones more so who have a, not necessarily umbrella, but some form of bureau business model outside of control already. You know, a large number of the bureaus, especially the large ones, are already AML, for instance. So the impact would obviously be a lot lower.
Yeah, that makes sense. Great. Well, listen, let's jump into the next topic then, national minimum wage. Matthew, I'm going to come to you first, if I may. Talk us through national minimum wage, things we need to consider. Please do get your questions in the box while Matthew's running through that. We'll just wait for the slide to change. It hasn't changed on my screen for the moment. But it's basically, if you can start, Matthew, with the position of the LPC, the options and plans around equalising age and current bracketed position on rates. There's a few other things there as well, which we'll run through during the course of this topic.
Yeah, absolutely. So currently the Low Pay Commission will be working on their annual report to government, which is due by the end of this month, I believe. Usually the budget would be probably earlier in the month of November. So I don't know whether they'll get an extension on that report or whether they still have to get it done by the end of this month, but they will put to government what they think the national living wage and national minimum wage rates should be. Now, we did have a revised estimate partway through the year. Now, sometimes they do that just because factors change, and with the calculations that they currently do, they're now asked to accommodate a sort of real living element, or sort of factoring in the cost of living. Sorry, struggle for the words there. Factoring the cost of living into those national living wage calculations. So they've been updating those estimates. Personally, I'd like to see a little bit more clarity on how they come up with those cost of living elements, because previously we could have always worked out, if we wanted to, what 2/3 of the median annual income was, so that we could work out those estimated rates. Whereas now it's probably a little bit harder for sort of people outside of government to work out what those estimates might be, which I think from a sort of clarity and forecasting point of view isn't necessarily the best thing. But one of the big things that they've currently been asked to work on is to get rid of the discriminatory age band, the 18 to 20-year-old wage band, so that everyone who is an adult will receive the same national living wage. Now, there has been some criticism in the media lately of that, as that it might discourage employers from hiring younger workers. So there is some concern there. However, that's what they're currently being targeted towards, and that's what they will carry on working on, I suppose. So it's just seeing what the plans are with regards to that. We would expect that to be in the report released just before the budget. Now, as well, in the national minimum wage space, we have just had the national minimum wage naming and shaming list. Now, that's the Department for Business and Trade releases that, and that this time was a list of 491 businesses that have been penalised for failing to pay the national minimum wage rates. And I believe this time they said it was about £6 million that was underpaid, and that also generated £10 million worth of fines for HMRC. And just looking at the list here, the top 3 reasons, just so that try and learn something from it. That's what we want people to do from these naming and shaming lists. The deterrent of being on there should be enough, but you might as well learn what those top reasons are. That's failure to pay the correct rate to apprentices, failure to pay the uprated minimum wage, so when the year ticks over, making sure you're updating your systems to the new minimum wage, and unpaid working time, taking below national minimum wage. So there's the top 3 reasons, and hopefully you're not falling foul of that, but definitely make sure that you're checking those things to make sure that you're keeping up to date with that, and don't end up owing HMRC up to 2 times the underpayment, I think is the maximum fine that they can levy.
Okay, great. Well, I've got some questions coming in. Before I jump into them, any additional commentary, Richard?
Yeah, I think it's quite interesting actually. It obviously is they have have favourites that they're going for with each one of these, because obviously for the first time the whole area of the apprenticeship rate seems to have had enormous focus. And this time, interestingly, deductions hasn't. So previously, it's been deductions has been the big sitter for uniforms and the like, where there seems to have been a much bigger hit on those apprenticeship businesses this time. So whether they focused on businesses with apprenticeships is quite interesting in that respect. It's also very interesting that I guess the modelling that they're looking at using for the equalisation of age. You would expect that possibly in the budget we might get some more focus on what Matthew was quite rightly saying, but it could be like a one hit straight away. They've talked about dropping it at a year at a time. So I think the actual final version could be quite interesting as to which direction to go.
2 options. So option 1 was that they can reduce the age at which the national living wage applies by 1 year at a time. So then it would be the 18 to 20 age bracket, then it'd be the 18 to 90 age bracket, then it'd just be the 18-year-old age bracket, and then it would be got rid of over 3 successive years probably. I'm not a fan of that because I think it creates a lot more trigger points where you could get it wrong, as we saw in the naming and shaming list, failure to pay the uprated rate. Well, if every year those bandings are constantly shifting around, it kind of creates a lot more opportunities to get it wrong. So I'm not in favour of that. But the other option was to increase the 18 to 20-year-old band rate by more than would normally be expected each year to try and catch it up with the national living wage. The question then is over how many years do they do that?
Yeah, and obviously they did that last year to a degree. But you'd think it would be another budget, because you know the budget from our side is going to be comparatively quiet unless they do the big tax thing. So they need something to talk about. So you'd certainly feel that it would come up there. I guess the other thing, and it seems to be getting quite a lot of leverage, is the real living wage. So that again was announced this week. If memory serves, by the 1st of May. I did have the rates up in front of me, but I've dropped them now, but they're obviously a bit higher. And whether it's just me, but they seem to be being reviewed against more things. So there was an amendment around maternity possibly being reviewed against the real living wage in the future. So, you know, what direction does the government take in relation to its, I guess, use of the low pay commission in the future? So I think it's a very open sort of book at the moment as to what the future under the current government's going to look like in respect of the decisions they're going to make annually. Because obviously there are other pressures on the current government, especially from, and right, so the unions, for instance, who have wanted an application of a higher rate now for a number of years. So I think it's a very, very open book as to what the future could look like with it.
Attention payroll leaders, if you're listening to this, you already know that payroll has never been more complex. Compliance risks are rising, skilled talent is scarce, and getting it wrong can cost your business way more than just money. It can cost you trust, retention, and of course, brand reputation. I'm Nick Day, host of this show and also CEO of JGA Recruitment Group, specialist global payroll recruiters. Here at JGA, we're so passionate about payroll, we've even turned it into music. Don't believe us? Head to your favorite audio platform and search for Payroll Powers the World, and you can quite literally join us in song about how we believe payroll deserves its moment in the boardroom to shine. At JGA, we'd like to think our passion shines through to our recruitment results as well. With a 97% retention rate and an average 19-day job brief to hire success rate, we work fast, we work strategically, and we work with purpose to connect you to the hidden payroll talent that job ads and direct search methods will simply never reach. So if you're hiring or indeed planning to hire, why not partner with the experts that are shaping the future of payroll? Partner with jgarecruitment.com today, or better yet, drop me a message directly, and together we can make sure your next payroll hire is your best one yet.
Yes, I think great coverage there. The 491, just to point out some slight differences, won't include any employer caught breaching national minimum wage for salary sacrifice alone, because they're no longer part of the shaming list. They do have to pay the underpayments to the employees, but they're not on the list. Now, some employers sometimes say that was the only reason they got caught. They shouldn't be on the naming list. If they're on the naming list, they were caught doing other things as well and have been fined a penalty for doing so. Apprentices does seem to be a big area of concern, and I see it on social media a lot. You see a lot of apprentices saying that their boss is trying to, they've ended it, they're trying to recover training costs. Unlawful, can't do that for an apprentice, and stuff like that. It's kind of amazing what goes on, and there's why it's a focused area is because of the pretense. I think there's an element of people are called an apprentice when absolutely there's no apprenticeship in place at all.
Yeah,
no training being given.
We've just done quite a large audit for a bureau on a client, and they're calling people apprentice, and they've worked for the business for 7 years, and you kind of have to start questioning,
Yes.
are they? So that must be the most impressive apprenticeship standard ever that lasts for that period of time. So I think how
really
much of that is a catch.
Or a really bad apprentice.
But of course the rate only applies for the first year if they're 19 and above.
Absolutely.
So just remember, you can't keep on it forever. So it's interesting. So the real living wage was announced yesterday. That's the voluntary real living wage by the Living Wage Foundation as £13.45. So, and the London living wage was announced as £14.80. So those of you who are accredited as living wage employers, you have 6 months in effect to implement it, or to the 1st of May. So the 1st of May 2026 is the very last date you can implement it. You now need to plan to implement that. Now it's been announced. Now, interesting, at the CIPP conference, I was speaking there and also attended Jenny Morris's session, who is a national minimum wage expert. And of course, at the beginning of the session, she asked the question, do any of you believe that you have any problems with national minimum wage? And no one raises their hand. And then at the end, everybody looks rather worried. But one person was sat next to who I know is a national minimum wage audit official from HMRC, because they attended her session but stayed silent, but said to the chap that she was sat next to, "We're all right, we're a living wage employer." His response to her was 15 of the 491 shamed employers were living wage employers. And I think what that's saying is that the difference, the accreditation for living wage is that you pay a pay rate of $13.45 an hour.
Maybe as well, Simon, that everyone else
reach-
knew who he was, and that's why no one put their hand up.
Well, maybe. Oh, well, too right. They look rather sheepish at the end, though. They should have looked really confident at the end
Yes.
as well. But the oddity about minimum wage is it's not about the hourly rate at all. It's about how much you've paid them that counts as national minimum wage pay, which isn't everything because premiums don't count, divided by all work time, including unpaid work time. And that's where lots of people find that they are breached. And that was one of the reasons. Was that number 2 or number 3? I think was number 3 of the failures. You probably got even to hand the number of employers there was, but the amount of employers that claim that you have to do training in your own time, etc., unpaid, or have to be early, or can't leave late, or if you're 5 minutes late, that's 15 minutes lost on your timesheet by the time clocking systems, etc., automatically. The number caught that actually they may be paying the national minimum wage rate, but when you divide all the unpaid work time into it, you're way under.
Yeah, so the educational bulletin says there was 103 of those employers, and that includes additional work before and after a shift, rounding clock-in times to the nearest hour, half hour, or even 5 minutes, and unpaid travel time.
Yep.
Okay.
And then I think there's a deduction element later, isn't there, in which was, as Richard said, it used to be one of the big ones they focused on, but I think they're focusing on the easy fruit on the tree. I think there were 11 down there for deductions, of which some of that is charging employees for training. You can't.
Okay. Well, look, we've had quite a few questions here, so let's start racking through these for our audience. First one is, when is the announcement on national living wage expected? I think you mentioned a little bit of that already,
Yesterday.
Simon, just to be clear. Yesterday.
Yeah, It was yesterday, 23rd of October.
Well, that was the
question.
real living wage. The
national living, sorry, national living wage.
National living wage
budget.
will probably be at the budget, will be confirmed by government whether they're accepting the recommendation of the LPC.
We
Okay,
sometimes hear it a day or two before, but the budget is the official announcement point.
Okay, fantastic. Question number 2, do net pay arrangement pensions affect national minimum wage calculations? Our understanding is no. However, on a recent webinar with HMRC and ACAS, this question was asked a number of times and they couldn't answer the question properly. It appeared they didn't know what net pay arrangement meant. Andy, over to you.
No one knows what net pay arrangement means.
Briefly sourced a net pay arrangement, salary sacrifice. I don't see why that would have any impact at all. I don't, because it's what is the amount of pay versus the amount of hours in that particular pay reference period from a national minimum wage calc, or at a person's wage. And that net pay arrangement is just reducing the
taxable gross.
Payroll. When you can do the calculation, taxable pay is less because the pension is reducing the pay received for tax purposes. I don't see anything unless Simon, Richard, Matt, you've got any thoughts?
Yeah, it's only the sacrifice if there's that's applicable.
Yes. So a salary sacrifice isn't an employee contribution at all. Often it's described that way. Nothing is being contributed to the pension via salary sacrifice. The employee is taking a contractual pay cut. So pay has reduced. They're doing that on an agreement that the employer will pay a free enhanced employer contribution higher than they would normally receive. And so it's sort of, I'll pat you on the back if you pat me on the back arrangement. they're not contributing a penny in a salary sacrifice arrangement as an employee. The employer is just enhancing their contribution. So that always reduces national minimum wage pay. But a net pay arrangement, or even a relief at source scheme, because national minimum wage is not pre-tax or post-tax, it's NMW earnings, got nothing to do with tax whatsoever. And so pension contributions do not reduce national minimum wage. Neither do securities purchases under approved schemes. So if someone has a deduction under a share incentive plan, doesn't impact national minimum wage.
Okay. Next question. The ONS are sending wage survey after survey after survey after survey. Do they think us payroll folk have time on our hands? I get a monthly and 2 different annual requests. Are others seeing the same sort of continual contact from them? Any tips to get rid of them or to make it clear that enough is enough?
Break the button.
Smiley faces. What was that?
Break the button. Because it's only a button, isn't it? You just press a button to run payroll and stuff. So it's only that effort, isn't it? So if you break the button, you can't do it.
Oh, I see. Yeah.
Yeah. No. Don't know what to say. It seems crazy, doesn't it? And again, the assessment of earnings for the ONS reports isn't gross pay for tax or after tax at all. So you have to do a sort of a similar assessment, not quite the same as NMW because overtime premiums do count, etc. But I feel the pain. But yeah. But hopefully,
so let's all go. Let's go right back in. I'm sorry. I was saying, let's go right back in time to when RTI was first discussed. And part of RTI's, I guess, value was going to be the removal of manual ONS requirements because it can all be taken from the RTI data. Or did I dream it?
Must have dreamt it.
I think
Yeah,
it was
must
a
have.
nightmare.
Must
That
have.
was, Richard. Well, that just reminds me of a thought because, you know, Matt mentioned about the fact he's working on the Payrolling benefit in kind. There are a number of people that have kind of said, you know, they said, oh, they realised that I was on the RTI task force when it was introduced. And so sometimes there's an element of, oh, so you're to blame for why it's so bad. And I think I sort of mentioned this to Matt, and it's sort of, if we hadn't been involved, see what it would have been like, because it would have been far worse.
I'm keeping that one in my back pocket, Simon.
Sure.
I'm assuming this is related to the naming and shaming, but just a simple statement that says, can you name the top 5 businesses?
Yeah, probably could. I can look it up, but they tend to do that in terms of value.
Yes, and I suppose that's a good point. That's a good point to make, is that looking at the naming and shaming list at face value, some of the values are incredibly high. However, not to excuse any of the people on the list, you also have to take into consideration the amount of employees that are affected and the timescales involved, because this isn't just sort of for any particular tax year. Some of these companies, they're looking and investigating 3, 4 or even more tax years there. So once you start breaking it down, something that looks like many thousands of pounds, again, I'm absolutely not excusing them, but if you were to break that down for every employee over every pay period, you could be looking at only a couple of pounds every month. And then it doesn't seem like such a egregious error. But just to give you sort of an example, the top one, Euro Garages Limited, failed to pay £824,383.62, but that was to 3,317 workers. So when you split that across that amount of workers, again, it's absolutely not acceptable. But then you're looking at hundreds of pounds per worker rather than, you know, 824,000.
And even that could have been over 4 years, Matthew, as you quite rightly said. So.
Yes.
Exactly.
Because potentially they can go back 6 years.
When calculating holiday top what is the maximum period to use? And if an employee has had any unpaid period, would you need to calculate when they have had a full period of pay?
Yeah, I'm not sure if I got the question overly, but the averaging period is generally referred to as normal weeks. So you discount 0 weeks. If you discount a week, you're meant to go back another week and get the earnings in for that period.
Yeah,
I don't know if that's answered the question.
Yeah, so if you discount 0 weeks and also statutory weeks, so parental pay, sick pay, but it depends on what they're, sorry about the dog, it depends on what they're paid for sick. So if they are paid full pay or an OH or an occupational sick pay figure that matches their pay, then that is a paid week. But if only statutories are received, they are also not included.
Okay.
I loved this response, and I give this response all the time to these questions. The prescribed method of working out what your statutory entitlement to holiday pay is mandates a minimum that must be paid. So if you want to discount a week and go back further because it's a week that has more pay in it, that calculation will result you a higher amount than the statutory minimum that you have to. As long as you pay over that statutory minimum, it's fine. It doesn't matter how you calculated it, as long as if you do calculate it correctly, what you paid is over that amount. So you can pay someone £1 million per week for their holiday if you want to. Not suggesting it, but if you do that, it's very likely you're going to be compliant.
Yes, it's one of those oddities of law, isn't it? And it's something I've talked about a few times, and for the CIPP events as well, is for tax, national insurance, student loans, statutory payments, there is a right and a wrong answer invariably, although some of them have choice, because there are, you can do table method or exact percentage method for certain calculations. There is 1 or 2 right answers, and there's lots of wrong answers. With holiday pay, and I'd even say, Andy, with pensions, the law doesn't prescribe what the value is, it prescribes a minimum. So as long as you exceed the minimum, you're good. It's when you breach the minimum, you have a problem.
Yeah, minimum and scheme rules.
Well, while I've got you there, Andy, another pensions question. Can an AVC pension contribution bring a colleague below national minimum wage?
No, it's AVC is just a normal pension contribution. If they were doing the AVC as a salary sacrifice, obviously then we go back into the salary sacrifice discussion, but AVC is just a pension deduction. They've chosen to pay an additional amount as an additional voluntary contribution. So you're still looking at what the pay value is for national minimum wage.
You do have to be very careful with AVCs as to what they truly are. Are they a AVC against, say, a net pay arrangement, or is it what they call a shared payment AVC, which truly is a sacrifice?
Yes.
So the terms and rules of the AVC must be checked very, very carefully.
Yeah, it's a misnomer of a term sometimes, because an AVC is an additional voluntary contribution. You'd think on that basis of the definition, it's by the employee, nothing to do with the employer, but there's increasingly smart pension arrangements or not so smart pension arrangements, salary sacrifice exchanges that have borrowed the term. So it's an element of, is it a genuine employee contribution or not? If it is, there's no risk to NMW. If it isn't, and you've messed it by playing a contractual flipping with salary sacrifice arrangements, it will reduce national minimum wage pay. And I think that's what you're saying, isn't it, Richard? So it's
and
very careful,
especially
because
the ones you
are being
really have to
mixed.
look for instance, is bonuses. If people are flipping bonuses into AVCs, are they? Or
Yes,
are they
real.
a shared payment plan?
Correct. And if it's part of a net pay arrangement, the contribution would be before tax, but there'd be no national insurance relief. you pay national insurance on that amount. And if it's a relief at source scheme, it's after tax because the pension will claim back the tax.
I was going to say, maybe a key way of looking at it is, are you paying it over as an employee contribution or an employer contribution? Because that will be an indicator to you that it's salary sacrifice if it's employer and normal contribution from the employee if it's net pay arrangement or if it's source, i.e. an employee contribution. How's it been identified on the pension provider output file? Are you putting it in the ABC column as an employee deduction, or you put it in the employer contribution column, maybe an additional employer contribution column, just to help if you're not sure which way around it is yourself.
Do we know what sort of statistics are or were, Andy, on those that are getting it wrong from RTI submissions? You allowed to tell us that sort of thing?
Well, it was between 5 and 10%, depending upon what cut you took from the RTI data that the regulator was receiving. So the regulator will pick it up with the pension provider. So looks like you've got clients who are doing the wrong tax relief, but some of the pension providers now are picking it up themselves. So I've been helping a few people where the pension provider has said, it looks like, so the last one I looked at was the pension provider said, this looks like you are doing net pay arrangement when it should be relief at source. And guess what? You've got double tax relief, it appears. I looked at the payroll records. Actually, no, it is correct. It is relief at source that's been operated, and it is a relief at source scheme. But what was happening was the contribution rates were being shown as the reduced 80% value, the amount after basic rate had been deducted. So the pension provider was saying, I don't get it, because it should be 10%, but you're an 8% deducted through payroll, but you're quoting 8%, but it looks like, so just the way that the data was being passed over to the pension provider and their interpretation of that data made it look wrong. But fortunately, it wasn't wrong, which is so much easier.
Yeah, life is so simple, Andy, isn't it? You think net pay is not net pay, relief at source isn't relief at source. They mean the opposite things. And some say reduce the contribution by 8%, others leave it as it is. I always find it imaginative. It's sort of, if I wrote £100 to my pension company, would they only cash it for 80?
Yeah. I know, it's so yeah, it's just one of those classic, it's just evolved and it hasn't been controlled. And HMRC, obviously they did there, but even their their basic payway tools, they're sort of, it's not a payroll system, not allowed to compete in the payroll market, but it is a gross to net calculator. And if you look at there and you look at the help text and stuff, it says net pay arrangement, and relief at source is described as not net pay arrangement. It's only when you click on the help button, it then says it's relief at source. Just, yeah, anyway.
That's why it's interesting. This is why there are questions in the box. There's always the nuance that we have to consider.
So I was thinking that if there's any surprise that NMW audit people don't know what net pay arrangement is, no surprise to me. I think half the population don't understand it.
We've got two other questions to get through. I'm obviously conscious of time, but the topics still to get through as well. So last two questions. If we have employees who can't holiday purchase via salary sacrifice due to minimum wage breach, is there a risk of letting them purchase post-tax? Richard, so you're nodding quite quickly on that one. Or shaking your head.
We're back in the world of what are you actually doing, I guess is the key here, because all you're doing is moving it, surely. And they're not getting the same value. It's like any salary sack, isn't it? If they can't afford the salary sacrifice, you can't just move it to a net, because whatever the sacrifice was applying to. But then obviously holiday pay is slightly different.
Yeah. And there's a question, who are they paying?
Yeah.
If you deduct it after, who's being paid? Oh, that's the employer. Oh, deductions for the benefits of employer, reduce national minimum wage earnings, the breach stays.
Okay.
But it doesn't help.
Last question. what happens if a person in a cycle to work scheme leaves the company and there is still a balance outstanding for the cycle to work scheme?
Mhm. Well, I
With the
think
rules of a cycle to work scheme, the bike is property of the company, so it would be retained by the company in essence, or it should be. There are rules on HMRC's guidance, or is it the Department for Transport's guidance actually?
No, it's
that
HMRC's
state-
valuation, Matthew. Yeah.
Yes, it's the valuation based on how long the cycle has been obtained for, or how long is left on the agreement. So there's ways to work out what the value of that should be if you wish to then transfer the ownership to the individual.
It's
Presumably
also
that they-
not unusual, Nick. I was going to say, Nick, it's also not unusual to there be follow-up schemes built into the scheme. So even though they lose, the sacrifice period is finished or the individual is finished, it is not uncommon to have a almost like a interest-free loan to cover off the HMRC balance. It'll be down to the scheme rules, Nick.
What about if they cycle off into the sunset and they have no intention of giving it back? Is there any sort of what do you do in that situation?
It's same as anything.
Someone, please.
Company own the bike.
Yes, it's not their property. There's a question of what do they want to do? Do you want to let them keep it or not? I mean, you could say lots will have a recovery method of it. You've just got to be careful because who are they paying? In effect,
that's a criminal. That's a criminal issue. Then you would. That's
potentially
what you do. Yeah.
Or
Yes.
you steal all their back. Or you steal all their back wheels.
Yes. Now, some schemes may operate under other things, and it's something I've been exploring with the Financial Times journalists, because I'm not sure how they work. Because if you transfer an asset over to an individual, that's due in year, the taxation on the asset transfer. So they'd be owing 20% tax, but some schemes seem to have the repayment over 2 years. You can't pay the tax in the second year, it's due in the first. So you'd have to collect the tax on the benefit and have them draw down on the loan for the repayment of the bike. So there's an element of it doesn't work sometimes. It's just
because the transfer happens in the 1 year. The 2 year thing is almost a completely separate.
Exactly. Yes.
Yeah.
If it's in 1 year, it's in the year. If it's in 2 years, the liability is in the first.
Just give them one wheel and the handlebars in the first year.
Yeah.
Yep. Well, that was always the well, that was always the thing about people get worried about it has to be available to all. Principle with cycle to work schemes is whether you can sell them a bell or a horn or something, a squeaker alone. Does that work? No, I'm just being funny, Nick. So
I know you too well, Simon. That's fine. But let's jump in then. We've got constant time. I do want to make sure.
Let's carry on.
I do want to make sure we've got time to give everyone their free download of the SD Worx HR and Payroll Pulse, which is the slide after this one. So let's jump into my time. Birmingham City Council signs equal pay claims agreement with unions. What leads different jobs to be deemed equal? Payroll setup informs banding and leads to equal pay claims. Simon, you've already started nodding, so I'm going to come to you to run us through this if you can.
Probably very little. It might be someone else's topic on Birmingham City. I know that they've been challenged by their workforce for some time, predominantly by females who were doing what they felt were similar jobs to males, but the males in their area of the city or whatever were paid a lot more than the females were. So there was a segregation of groups of male and female, where the males were paid more money than the females for doing what courts have judged to be equal value of work. And so someone else may be able to give more information on the agreement with the unions, but that was a significant amount of legal challenge faced by Birmingham. And so any of the others got specifics on the case. Yeah, go on.
I sort of just wanted to add it in for a quick conversation, just because on the 14th of October, so a week and a bit ago, a agreement was reached between the unions and Birmingham City Council. It was for less than they wanted in the first place, but as all agreements are, it's a compromise in the middle somewhere. And to be honest, I did wonder if anyone sort of had any further insights on it, but I suppose the crux of it is that different jobs within the payroll systems or within their HR systems were banded, regardless of if they were necessarily equivalent jobs or not. And within the media, there's a lot of speculation and people obviously arguing one way or another whether those jobs were equal. That's obviously why it was taken to court and why the unions wanted to fight it, in terms of one of those groups of people, I believe in this situation it was the bin men, were given a pay award and a pay increase, and other people who within the HR system were on the same banding did not receive the pay increase. And because of the demographics of those two groups, it was deemed to be an equal pay issue. So I suppose really for sort of bringing it to the attention of the payroll community, it is have an understanding of how your payroll and HR systems are set up. And if there is anything within those systems that relates to banding or grades or levels of employees within your organization, you do need to be aware of the demographics that exist within those bandings, and that even if you deem different jobs within those bandings to be sufficiently different, is there a possibility that should people discuss those bandings and those pay and salaries, which they are allowed to do for purposes of equal pay disputes, are you protected in those instances? So it's really just having awareness of this case and how it could impact your business if there are some discrepancies, as there was with this case.
Okay, perfect. Anything else anyone would like to add, or shall we move on to the SD Worx study? So while we're waiting for that, well, another question, last question, back to the bike. Can't you just take all outstanding cycle to work owed from the final payroll?
I think you've got to consider what the scheme rules are and who are they paying and what payment are you taking it from. Okay, now sometimes there's a view that taking a payment after tax is different than the payment before tax. So is it a payment after tax? Does that affect NMW in a different way? The suggestion is it isn't different if the payment is to the employer and it's the employer's bike. So be careful. Now, if the individual has left and there's residual monies left that's above and not related to national minimum wage, then potentially you can take that, can't you? As you can with training recovery costs, etc. But if you're reducing pay that is to cover hours worked at or above NMW, I think you need to look at it and consider what's happening.
Okay, let's jump in then to the last major topic of today, really, which is the SD Worx HR and Payroll Pulse survey. I was going to stay with you, Simon, as the representative of SD Worx on today's panel. While you're running through some of the results, some of the headline numbers here, which you can see on your slide, I'm just going to put this link to the report in the chat. So if you want to get access to this straight away, have a look at your chat and you can access the report. But Simon, over to you.
Yeah, sure. So we survey across Europe, now being one of the largest, if not the largest, European payroll and HR service provider, for 5,625 HR decision makers, and also survey 16,000 of their employees for some insights into the priorities and needs, etc., which we publish as the HR and Payroll Pulse. This is published by our own institute. It's the largest research project of its kind in Europe. It's associated with a number of Belgian universities in part of its outcome and research basis, and it's to help people understand what people really want from work and what other employers.
Seem to have lost Simon's audio. Is that just me?
No, yeah, he's gone frozen.
Well, while he has frozen, I've actually read this report. And actually, there's not just this report. There's a number of reports on their website. I also recommend you have a look at the 2024 European Navigator report, which gives some really, really interesting stats all around the European payroll market. Some of the people, for example, a stat that I picked up from that particular report recently was that 37% of European employees are financially stressed, and it talks about certain things you may want to consider, such as EWA, that might support financial health and financial wellness. Loads of things, all, well, I think both of these are the biggest surveys of their kind, really, in terms of surveying European HR and payroll decision makers, as it says there, across multiple countries. So if you're interested in finding out more, this latest research project is the largest of its kind in Europe. Loads of fascinating insights. The link is in the chat, so you can find out more about that if you wish to do so. While we're waiting for someone to come back, we had another question come in, Richard, so I'm going to ask if you can handle this one. When calculating holiday, what is the maximum period to use? And if an employee has had any unpaid period, would you need to calculate? Would you need to calculate when that have a full period of pay? Does that make sense? Just a bit of grammar change in there. I'll read it through again.
Weeks.
You got it.
And as Simon quite rightly said, in Great Britain's 52 paid weeks reviewed. For non-paid weeks, we go back up to a maximum of 104. Obviously, if people aren't paid for a week, then it's going to slew the numbers, the percentage, quite dramatically, very quickly. So, but importantly, paid means that there was pay. So an example could be that they only worked 2 days instead of 5. Tough, that is a paid week. They've been paid for the 2 days, and that's classified as in. So if there is pay received and it's not statutory, it is a paid week.
Okay. Great, that answers that. While we're waiting as well, I've just put a couple of links in there for people interested in the payroll podcast. For those interested in what it really takes to become a payroll leader in 2025, I did a fantastic interview with Carlin Davis, who was the Texas Payroll Professional of the Year. But what she talks about isn't just around US legislation, it's very much about leadership qualities and some of the steps she took to really be seen and as a leader in the payroll space. In a very short space of time, she went from being an introverted payroll manager into talking on the largest stage at the Payroll Congress last year, and it's a really fascinating story. So do check that out. I've put a link in the chat, and there's also a link through to the YouTube video. I want to remind everybody the next Payroll Question Time will return on Thursday, the 27th of November, the day after the budget. Please do put that in your diaries now. It's going to be a very, very busy PQT. It's going to be lots of interest in that particular show. Of course, even if you can't make it, it's worth registering because you'll still get access to the slides and the conversation. And just to remind everyone as well, this episode, in fact, all episodes of Payroll Question Time are released on audio and on video at the Payroll podcast as well. You'll find the last episode, September's issue, was recently released. So again, if you want to listen to this through again, or if you want to share the episode or an element of the episode with your colleagues, if there's something that's fascinating or interesting to you, then please do look out for this release on the Payroll podcast, both on YouTube and on all major audio platforms. Usually comes out a week or two after the live session today. So do keep your eyes and your ears open for that. Hopefully we'll get to see you all again on the 7th of November. The link will be open soon. You can find it at sdworx.co.uk/PQT. So hopefully you know where to go because you've joined us today. Just want to give a final thank you to our panel today and also to our audience for some fantastic questions. Keep them coming. We love those. It's what makes the show work. But thank you today to Simon Parsons, who is now just back with us in a slightly different room. I think we found Simon in his gym by the looks of things. So that's very good. Andy Nichols, Richard George, and of course, Matthew Acrick for his final PQT, at least for the next 12 months. I wish you every success with your HMRC secondment, Matthew. I've been Nick Gay. I've been your host today. It's been a pleasure to host the show, and we'll see you all again on the 27th of November, day after the budget. Thank you.